Hey everybody, this is 𝙁𝙁𝙁𝙍 with 𝙂𝙊𝙇𝙑𝙀𝙗.com, and I have a very special returning guest of the program. Now, it's been a while since Lynette Zang has been here. I think that she was my very first interview on YouTube. I want to say about 4 years ago, Lynette, when I came out and visited you in Phoenix, and it's been, quite some time since we've had you on. I definitely want to have you back on because I think a lot of what you and I do is very similar, although a lot of times you pull up interesting stuff that I don't even know where you get it. You just seem to have this knack. How have you been the last few years? Yeah. How have you been the last few years? It looks like you guys have a new studio and everything. Tell me about that.
Oh, yeah. Actually, it's been very, very busy. So, yes, we did move offices, and I set a studio up here in my home studio. And then I have a studio up in the Bug Out location. So wherever I am, I can film. And I really like that. But yeah, I mean, it's been... the last 4 years for everybody has been probably pretty crazy.
It has. And, to the point of filming at home, I think COVID was great for a lot of us. I was a technology worker until I did this full time, and it was great for me. I got to work from home. So it's a nice opportunity if you can get it, I guess. Just to share with people, this is the video that you and I did, gosh, about 4 years ago. And it was fun. I went to visit you guys in your studio in Phoenix, and we had a great conversation. I really enjoyed it. And, like I said, it's been too long, but let's get into all the stuff that's gone on since then. And there's a lot of it, Lynette, so I don't know if we'll cover everything, but
I was going to say, how much time do we have?
Yeah, that's right. We may need hours to cover everything. So let's just go over, I think, maybe some of the more, what people in my audience really want to know about, which I think you can really help them with. And the first thing is the central bank digital currencies. So,
oh, yeah.
You reported they were testing the tokenization, and I also reported they were, the New York Innovation Center and Project Cedar and all that stuff that's going on with regards to testing the digital dollar. What kind of, where are we in that? Are they testing it? Are they going to roll it out soon? What's your view on the digital dollar?
Oh, yeah. Much as they say, well, we're still looking at it, the fact that they're rolling out the digital dollar is really far more telling, especially when the U.S. and the Federal Reserve keep saying that, that we want to be in the forefront of this technology. Well, but I'll tell you what bothers me. There's a lot of things that bother me, because obviously a CBDC, central bank digital currency, is fully programmable and therefore can control you a whole lot better if you don't have any wealth outside of the system. That's key. But when I was doing some research on this piece before that one on the CBDCs, I discovered something really interesting and also troubling. And that is that the central banks are redefining what money is. So originally, to sell it to the masses, it was a tool to enable the population to specialize. So you have bakers, you have farmers, you have accountants and attorneys, etc. And gold is a labor-based currency. So you are trading one form of labor for your form of labor. That's fair. And, money is supposed to be divisible, barterable, a short-term store of value, and a long-term store of value. Well, obviously, we know with fiat money, so the government debt-based money, inflation is baked into it. Well, they lopped that off. So now there are 3 functions of money, no longer 4. It's probably more honest, that is not a long-term store of value. But when they institute the CBDCs, when they put in there that boom, forget that short-term store of value. And it makes sense, because one of the things they keep talking about is their ability to push interest rates as low as they want to, right? Once everything is digital, then there's no more zero there. They can just go to negative rates. So you get paid, it immediately goes into your bank account that's charging negative rates, and you are losing money. So how do you even know what you're really getting paid? It's bad enough that inflation robs you. Now the negative rates will rob you. And so moving forward, once they've instituted that, money only has 2 functions. as a tool of barter and as a tool of measure. That's it. I don't know about you, but when I saw that, I had to reread that several times just to make sure that I was understanding what they were talking about. Additionally, the way they're going to sell it is that, well, once we have CBDCs, there will be zero inflation. So we're going into a hyperinflationary environment. Yeah, I feel real comfortable letting all of my wealth in the hands of these central bankers that have driven us into a ditch anyway, and maybe even a chasm. So, yeah, I have to say that that's, you know, something that really, really bothers me, because now you can't even imagine on any level that you would be fairly paid for your labor.
Yeah, it's really a tax on labor, and that's a key point. If you go back to the Constitution, gold and silver are money, and the government should not admit bills of credit. So the system we have now, right now, obviously, is not what the founding fathers envisioned. It's something else. And I wonder, Lynette, if you see them using negative interest rates in the banking system for electronic money. That IMF paper you and I both have read. Is that basically like a form of bail-in? Because what they're essentially doing is they're taking deposits away from people. They are taxing their labor, but they're taking it out of their bank account. Isn't that like a bail-in a way?
Well, it is. And who are they bailing in? Not you or me. It's their spending, their level of control, the government spending. I mean, because QE is just monetizing government debt. Let's face it. So is it a form of bail-in? I would say it's a form of robbery. I would really take it to that next level. And the reason why they have to do it, and you know, that doesn't mean once we get a CBDC, what I really want people to understand is that is not the end of this hyperinflation, right? That is just the next step, giving them more control. And we have to feel enough fear and concern in order to agree with that. But I would say that inflation is a bail-in and also a robbery, because you're not getting fairly paid for your labor, but it's more invisible. They've already taken or inflated away all the purchasing power in the currency. They have to go to negative rates and attack your principal.
They do. And it's, you know, do you think people will stand up for this? Because I know when the Chinese first tried their digital yuan, it didn't go successfully. They're having more success apparently now, as they're figuring out the human aspect of it and how to approach people and how to sell it. It's all about marketing, right?
Oh, 100%. It's all about marketing. Yes.
Yeah. Do you think that people will buy in? Because I say this because there's a video, I don't know if you've seen it. It was out on Twitter of Minnesota Fed president speaking at Columbia University, and it was an internal video that got leaked. And he was saying, tell me what the central bank digital currencies have that Venmo doesn't, or PayPal. Why do I need this? And he was talking about it being used as a tool of suppression. He's the Minnesota Fed president is saying this could be a tool of oppression. This could be social credit system in China. He was connecting all the dots. And I'm thinking, okay, he's part of the Fed. So do you think, but he understands it from the inside. Do you think the people will see this system, let's say they don't watch our channels, and they see it, do you think they're going to grab onto it, and why or why not?
I think that when people are scared enough and desperate enough, they will grab onto anything. So, and they've had enough. They did a study. So 16% of the American public has bought some level of cryptocurrencies, which my opinion always was 4 years ago. It's still that today, getting people comfortable and used to it. So unfortunately, I do think that people will grab onto it, particularly when it's just automatically deposited into your account. Here's free money. There's no such thing as free money. I got news for you. But people don't understand that. I think, however, there will be a pretty strong group. I do think that we could see a revolution, and I do think that it could even be a global revolution, to be honest with you, because the oppression is getting more and more and more. And you brought up China. You know, would China really ever stand for the protests? But here they are. They're actually inspiring the protests by the lockdown. So I think that part of all of this whole big piece since 2020 has been in, let's see how far we can push people. Let's see how much we can divide people, because then it is easier to conquer people.
And isn't that the famous, didn't the Romans use that with the bread and circuses? One, you distract, and two, you do all the stuff you want to do behind the scenes. And so I guess that's why, Lynette, on the political spectrum, and I don't want to get too much into red versus blue team. I'm a libertarian. I'm not on either side. But I notice in politics,
they're all just a distraction anyway.
It's kabuki theater, isn't it? Because you see the Roe versus Wade and the timing of that coming out. I'm like, why Roe versus Wade now after all these decades? Why is that coming out? So do you think that the distraction going out right now is designed to keep people away from the type of stuff that you and I are talking about?
100 bazillion%. You know, this is not my first rodeo. I'm a lot older than you, and I was there in the 70s and the 60s and the 70s. I was born in 54. And yeah, it is. It's misdirection. Look over here so you don't see what we're doing over here. But Roe versus Wade is, you know, let's see if we can take away the rights of the public. And they've taken away a lot of rights really since 2000, well, forever, but particularly since 2008. But they do it like a little bit at a time to see how people are going to react and respond to it. And then they just take a bigger step and a bigger step. But yeah, 100%, this is all misdirection to put into a new social, economic, and financial system, and have those that have been abusive of this whole system all this time remain in power. And so that's why I'm really hoping there is a revolution and they don't remain in power, and we can have a much more fair system.
Yeah, I do think, I would say this from my perspective. I think when we had the Declaration of Independence and the Constitution, it was the first time in human history that you saw a group of people stand up and say, we want our freedom. But also the rest of the world said, oh yeah, carbon copy. So now we have little republics all over the world. And of course, a lot of those small R Republican forms of government are often abused by the state. They create a two-tier system, one for them, one for us.
Right.
And so I wanted to talk about the BIS, and the BIS released a video a couple of years ago talking about the two-tier system. There's wholesale, CBDC, and retail. Yes. I suspect that there's going to be seigniorage, and that the commercial banks who get the currency first are going to get a more valuable version. Is that what you see in this system, where they're going to give us something else that's not quite as good?
Well, absolutely, because if you are, whoever gets the money first gets it when it has the most value. But you know what I find really interesting when we're talking about this is I kept trying to dig to find out what's going to justify money creation. Because in the current system, it's debt, right? But they have to burn off that debt so we can start at square one. And I think with the CBDCs, and I'm shaking my head on this, because what they talked about, and I had a couple of years ago, it was briefly mentioned that it would be based on debt again. But I mean, why is that so buried, right? That shouldn't be buried. Now they're talking about transactions creating the money. Oh, I want to go buy a boat. Boom. My transaction will create that money for that boat. Now, if money can be created that simply and that quickly and that easily, just like this, how much value does it really have? It doesn't.
That's right. It doesn't. And, I always wondered, back in my accounting class in college, I kind of figured out the system was screwed up, because I'm like, I can match credits and debits for a company, but how do you match credits and debits in the monetary supply? And you look at the Fed and they say, oh, we've only created $2 trillion of real cash. But then you look at the world and it's like, the world can't run on $2 trillion. And then, of course, you have the work done by Catherine Austin Fitts and the gentleman at Michigan State University about the missing money, right?
Right.
How much money do you think is actually out there? I just assume that they printed a whole bunch and haven't told us. And couldn't, Lynette, the situation really even be worse from like a hyperinflation perspective, that the depth of what is going to happen to the dollar, I think, is going to astound people, because there's so many of them out there that even the Fed doesn't account for.
Well, and not only that, but with the system that is developed really since the 70s, but more specifically since the mid 90s, has been one of leverage upon leverage upon leverage. So I don't really think that there's any way to even have any idea how many dollars are actually out there, especially when you take into account, which is hard to do, all of the derivatives that are out there. And those are just big leverage bets that you can't convert into, but hey, they go to the front of the line in bankruptcy, right? And all of those contracts, I'll tell you something that keeps me awake at night. And that is the transition from the LIBOR to the SOFR. So from the LIBOR interest rate benchmark that was created in the 80s, there is over 610 notional value in contracts that must be converted to that new interest rate benchmark. And I know when people are looking at this or listening to this, that their eyes will glaze over, right? But what you need to understand is this is a seismic shift, because those two interest rate benchmarks are not the same. And that means there will be a forced revaluation of all of those contracts. And that ends June 30th of 2023. And when they ran a test in October 2019 with 80 trillion, it was a big fat fail. Yeah. And it's not that they admitted that it was a fail. Everything just went dead silent. And about 3 weeks after that, they announced that they were postponing it from 2021 to 2023. And they had to force the markets to adopt it because they're not the same. Even with these accounting patches and things like that they put on them, they still haven't managed to make them the same. That's what keeps me up at night. That is frankly what I'm most concerned about. That is why I think we've had the kind of year that we've had, and that it's going to get worse. Because if they can get things to blow up before that takes place, then that's good cover for all of that, isn't it?
It is. And just to help people understand what LIBOR SOFR is, LIBOR for the longest time, the London interbank rate was set by, I guess, 5 or 6 institutions. It's kind of like a gold fix. They just to get together and say, oh, we're going to throw this rate out and it seems okay. There's a human determined thing that it blew up in a scandal a few years ago. And I think the market said, okay, it's finally time to address this. So they came out with SOFR, and it's one of these sort of financialized
in the US.
In the US, and then other countries have their own.
Right.
But everybody's switching over to a new system. Isn't SOFR like a derivative, though? Isn't it itself a derivative? Because I look at it and I'm like, isn't this just a derivative of what you already have? It's just putting more data in. But I don't.
Well, it is, and it's supposed to be where the LIBOR was a stated rate, as you said. The SOFR is supposed to be a market rate, except they exclude this group of bonds and they exclude that group of bonds. So they have chosen what they're going to, bet what's actually in that benchmark. It's a joke, right? I mean, the bottom line is it's all garbage. Winners and losers are chosen. And if you want to be a winner, you need to get in the position that the guys that are planning on winning, hopefully they won't win, are doing. And we've got global central banks that have now been accumulating more gold than they ever have historically, just through the third quarter of this year. What do they know?
They know it's time to get it on their balance sheet because Basel III has it as a high-quality liquid asset. And it's going to be China and Russia coming out saying, we have a lot of gold, US, prove yours. And whoever does, it's going to be a factor in, I think, the upcoming currency wars. And that leads me into maybe the step back to the 30,000-foot view, Lynette. I feel as though this system, well, you take SOFR and you take the digital currencies and you take all the new laws around everything that they're doing essentially with capital markets. Don't you think that they're essentially creating a two-tier system? There's money for the rich, money for the poor. And isn't that sort of like a feudalistic type of system essentially, but done through the banking system, so it's not quite so obvious?
Oh, absolutely. I would agree with you. And not only that, it's funny that you bring that up, because as I was listening to Bloomberg today, they were talking about people's shopping habits, and you have the wealthy that are going to the experience and the better goods. And then you have the poor, or even the whatever is left of the middle class. There's not that much left, actually, that are just, they're just struggling. So I think we've been in that two-tier system. Honestly, I think it is just getting to be more obvious, because the debt-based system, you don't have access to the debt like Apple does, or any of the large corporations, or even the governments. You don't have access to that level of debt, nor would you want it. Well, I don't know. I can't speak for yourself, but I don't want it, because when you have debt, then you can easily become a debt slave. All of this debt, it just gives you the image, the semblance of wealth, but it's not real wealth. This is real wealth. You hold it, you own it, it runs no counterparty risk. You brought up the biz. According to the biz, 𝙂𝙊𝙇𝙑𝙀 runs no political risk. It is a proven inflation fighter. So this is your shield against inflation, and certainly hyperinflation. So yeah, two-tier system, 100%, that's been in play. That's why you've got that division between the wealth and income inequality. It's so wide, it's way wider than it was in 29.
Do you think we're witnessing the death of the middle class?
Oh, I think we have been. Yeah.
I know it's been shrinking.
That started really back in the 90s. There is no level playing field. Amazon came out, and Wall Street made sure that they had plenty of money, so they did not need to have any profits. Well, yes. I know people that used to own stores, right? Mom and pop shops. That was the norm when I was growing up. And, they have to make a profit or they can't stay in business, right? They had to charge taxes. Did Amazon have to charge taxes? Nope. So they let that play until they essentially forced any of those mom and pops either out of business or to work for them. And now they're charging taxes.
And now they're roboticizing their workforce. So a lot of these people that went to work for them at lower paying jobs, maybe even without benefits, don't even have jobs anymore. And I know I live in Grapevine, Texas. I have a big Amazon fulfillment center about 3 minutes from my house, because North Texas is where they put a lot of warehouse space for the retail sector. It's a big hub. You got DFW Airport, 5 minutes down the road, it makes sense. Well, all the announcements coming out of Amazon are, we're becoming more efficient. We're laying off our workforce. And yes, they're hiring seasonal workers for Christmas, but it's a 2-month job. But the regular jobs are being replaced by these robots that run around and do fulfillment.
Right.
And the interesting thing about Amazon, to edify your point, the only part of the company that really makes money is their cloud services. The retail store has always been a loss leader. And it makes sense now in light of what you said, why they're doing that, because if you can put a bunch of small businesses out, and I think COVID did this too. COVID knocked out the restaurant industry, I think.
Yeah, absolutely.
Then at that point, what you have is all of this business sitting there, and the big corporations can go grab it, right? So isn't this like corporatization of the economy? The big companies are saying, thank you, I'll take this.
Oh, 100%. And we've been watching and experiencing the financialization of everything. Everything has been turned into a trading product by Wall Street. Even real estate, which, I mean, look, the Fed created this ginormous bubble, but since when do you buy and sell a house every single day, right? You don't. So they allow all of these mismatches. They do pick winners and losers. And that's why I really strongly believe that everybody needs to be as independent and self-sufficient as possible going into the mess that should be obvious. We're already in it. I mean, they used to say to me, Lynette, you can't say the reset that's already started. And I'd say, but it's already started.
Right.
It doesn't matter that nobody else sees it. I've been studying currency and currency life cycles since 1987. I see it. That's your job. That's my job to let people know what we see. And it doesn't matter if nobody else thinks that. Right? By the time everybody else thinks that, it's too late to do anything.
That's right. And what we try to do is educate people so they know. One last thing I want to ask you before we get into gold. So I kind of saved gold for the end. You have a video here from a couple of weeks ago entitled Central Banks Warn of Forced Selling. So can you explain what that video was going over?
Well, absolutely. Really, what's happening is there is this whole growing chorus of global central banks that are coming out and saying that there is going to be what forced selling is when there's a market crash, whether it's stocks or bonds or real estate, whatever it is, if you have borrowed to play those markets and those markets come down, then you're going to get what's called a margin call. And that means you have to come up with money or securities to meet a certain minimum. So basically, when they're talking about, that's what they're talking about with forced selling. The markets implode. We get all these margin calls because there's so much borrowed money in all of these markets. And then you must sell. Doesn't matter what you want to sell. It matters what the market will buy, but it becomes a loop. It becomes a doom loop. So you sell off so that you can meet those margin calls that pushes the prices down more. So then you have to sell off more to meet those margin calls. And it just goes around like that. And I think that the reason why they're warning it, number one, because they're not ready to stop yet. We haven't broken, even looking at the Bank of England, apparently they haven't broken enough stuff yet. So they've got to keep raising rates to break more stuff. And when it gets serious enough, then they're going to do a pivot. But I think they're warning us so they can't say, well, we warned you about this. We didn't cause this, but we're warning you about this. So a lot of forced selling. Yeah,
it's chaos. It's problem, chaos, solution, right? The problem, chaos ensues, people panic, they give you the solution. The funny part is a lot of times they're involved in creating the chaos, whether intentionally or not, because I do think there are good people in the system that may not understand what the system is designed for. But I do think that there are people who use those people to perpetuate it. And I think that's why people don't understand.
And
I can talk to people at the Fed, and they don't see it, but that doesn't mean that it's not what's coming, right?
I would so like to agree with you, and I don't know everybody at the Fed or at any of the central banks. Honestly, I don't. But when I see them parading out with their little script that they need to say to move the markets with forward guidance, we're going to tell you.
Right.
I mean, there are so many times I sit there and I go, what you just said is idiotic. It's not true. It doesn't make any sense. There is no historic precedence. So, and how could you not know that in your position?
Well, they should know for sure. One of the things that I think has happened was they've been inundated with, especially the younger generation, they've been inundated with garbage. And so it's garbage in, garbage out. And I think that's why that system is allowed to be so nasty, is a lot of people involved in the system don't know what they're involved in. Should they? Yes. Should they take personal accountability? Yes. Do they? I'm not 100% convinced, because I see guys like Minnesota Fed president come out and say this. It's dawned on him what they're doing. I could criticize him and say, why didn't you know this 5 years ago or 10 years ago? But I think that there are some people in the system who aren't, and I think that's one of the answers as to why people don't figure it out. Because I do think there are honest people that get taken advantage of. They get used. And I guess you can go back to Lenin's useful idiots. There are people in the system that are perpetuating a system that don't understand that they're being used for that purpose. And I think that's one of the reasons why, until it happens, a lot of people will deny it, because they just can't process the fact that this is what somebody's doing. Because the average everyday person, I don't think Lynette is capable of this evil. I honestly don't.
In general, I would agree with you, but I also think they hire to.
True.
You know, I mean, they do. They hire sociopaths because they cannot care what they're doing
That's
to
true.
millions and millions and millions of people. So I'll give you a little bit, but I won't give you much because these guys, it's their job to know. And there are some that are old enough, like Jay Powell.
Of course.
He knows.
Greenspan knew. Yeah, all the
Greenspan totally knew.
Yeah.
I used to love, my mom used to say to me, but Lynn, don't you think Greenspan's smarter than you? Don't you think he's smarter? And I'd say to her, boy, he sure has a whole lot more power than I do, so I sure hope he is. But if he actually believes the garbage that's coming out of his mouth, then no. But, you know, he had one tune before he became Fed chair and another tune when he left the office. And it's all the garbage in the middle.
Yeah, I don't think you get chosen for Fed chair unless they think you're going to perpetuate the system. And my question with Greenspan is why did you move away from like the Barry Goldwater sort of view on money and politics and move more into the status view? And I'll never understand that. There's been theories floated as to why he did. But,
probably power.
Yeah. Maybe that's it. Maybe that's the carrot they give you is we'll give you all this power to perpetuate the system.
Yeah, I mean, look at the level of power that man had. I mean,
tremendous.
It's almost godlike. And I think a lot of them have a God complex. I really do.
That's probably entirely true. For those of us that don't have a God complex and we're just trying to make it through the day, you've been preaching buying gold and silver for a long time. So give us your view on the gold and silver markets. Where are we? And I would say silver and gold are different. You know, in my opinion, but in your opinion, are they the same, the different? Do they have different purposes? How do you view the metals?
Well, first of all, gold is the primary currency metal. And when they do the overnight resets, this is what they reset it against. And though both gold and silver are used in every single aspect of the global economy, silver is more manufacturing and industrial. Gold is more monetary. So there is a difference. For me personally, I use silver for barterability because, you know, this is an ounce of silver and it's just easy to buy with a tank of gas, etc. And also historically, yes, they have different functions. So that's what I like silver for, is my barterable part of my portfolio. Gold, on the other hand, is my wealth preservation. It's also for positioning to take advantage of the opportunities that always present in a crisis. And it's also for legacy building, because for me, that's very important, having children and grandchildren and eventually great-grandchildren, etc. So there are absolutely different functions. And I think that and then there's different kinds of silver and there's different kinds of gold, even inside of those categories. It's not blanket. What I see happening is, you know, obviously a rising gold price is an indication of a failing currency. And so using spot gold, which is never referred to as spot gold, it's just referred to as gold. It's not gold, it's a contract, right? Cheap, easy to manipulate. They can create as much gold and silver that do not nor ever will exist as they want to. And it's never about the physical. But what's been actually happening is there has been a decoupling between the spot market, which is, you know, I mean, it's still a better performer than any other asset this year, pretty much. But the spot market versus the physical market, where we are seeing premiums expand on the lower, more base quality gold and certainly silver, and on the collectibles, which is what I personally buy. I don't buy bullion because they've been covertly confiscating it from you your whole life. Kind of hard to imagine at the very end they're going to go, you know, you get to keep that wealth. You know, I mean, maybe they will. I can't say one way or the other. but I kind of like a what if I'm right or what if I'm wrong, right? So I do the collectibles and I do the different levels. In other words, more scarce. And that goes into a different level for maybe growth. You know, one with higher populations might be more about taking care of a mortgage, etc. So there are definitely different kinds, but all of it, you hold it, you own it, it runs no counterparty risk. And once you get it out of the system, it basically is invisible to central bankers or to anybody else. That's why they don't, that's one of the reasons why they don't like it. So we have a strategy that I actually developed when I was doing all my studies on currencies and currency life cycles. It's just based on repeatable patterns. It's simple because, you know, look, I can't guarantee what's going to happen tomorrow. That's outside of my control. But I kind of feel like if something's happened the same way 100% of the time and you're doing the same thing, well, I don't think this time is different. I think you are more likely to get the same kind of result. And when all confidence in this Ponzi scheme is gone, they will do, I don't know how many overnight resets, but they will do overnight resets. And they will do it against this because this is all intrinsic value. The other thing that I want to point out that I actually have never heard anybody else talk about, but as we talked about earlier, I don't necessarily have time to listen to everybody because I'm busy producing. But when you are going into any kind of battle, would you rather have one little instrument or would you like a whole arsenal behind you? I bring that up because any of the fiat money products, the derivatives, the dollars, the stocks, the bonds, okay, basically, even though we've been taught that it's diversified, they're all dollar-based. It's not diversified. And it's used in one place, and that's the financial area. Whereas with both gold and silver, they are used in every single sector of the global economy. So they have the broadest base of buyer. Yeah, based on supply and demand, they're going to fluctuate, but they never go to zero because there's always demand.
There is always demand, and I think people inherently understand the value of gold and silver, and that's a good transition to talk about numismatics. I actually am a customer ITM. I want to point that out. And when I bought all the numismatics I bought, I turned in a bunch of bullion, gold bullion, traded it for some numismatics about 4 years ago. And a lot of people tell me don't get into numismatics, it's high premium, that type of stuff. And I said, no, I think there's value there. And I think numismatics are times when they even do better than regular gold. So
they are right now.
They are right now. And to that point, I just wrote an article where I had sold back to ITM some of my pre-1933s to fund a move I'm going to be making. So perfect timing. I mean, the gold had value. I needed it. It was perfect. I made a lot of money on the numismatics over 4 years. In fact, it's the best performing investment. It did better than my farmland. It's done better than my regular bullion. It did better than some of my rental properties that I used to have sold out. So it has been my best performing asset over 4 years. Why is that? Why are the numismatics doing better than the regular bullion? And do you think, Lynette, that will continue?
Number one, yes, I do think that will continue. And number two, you know, we knew that gold was in a long-term positive trend. So that's the right church. Now you got to get into the right pew. And again, it's hard for me to imagine after they've been confiscating my wealth since 1954 that they're going to suddenly stop at the end. So when I'm making choices, you know, it's always, I want to look and see what are the big kahunas, what are the big players doing for themselves? So I like to look at the rarity index. And the rarity index, I mean, those coins in there, you know, you might have a coin, 1 ounce of gold for like 8 million bucks or more, 15 million. Now, who can afford that? only the 1%, right? And these are also the people that either write the rules or have the ability to influence those that write the rules, but they are more in the know typically of what is going on than the normal Joe on the street, right?
Yes, I agree with that.
Right. So if you look at the graphs on that, what you're going to see is a huge breakout in the really rarities. So that means that what that means is that very, very wealthy people are buying in big, because it's really a huge breakout. On the lower level stuff, that's more what like you and I would buy. There has been a breakout. That breakout is growing, but it just recently started. So the smart money was already there. And so, yes, I do think it's going to continue because the big money, that's where they're going. And where else are you going to go? I mean, honestly, you know.
So Lynette, so part of your strategy is engaging numismatics. Why numismatics over bullion? I think you hinted at it before with taxation and things, but why numismatics? Because the reason I want you to answer this is everybody tells me, don't do numismatics, it's high premium. I'm like, it does. What matters is the value you're going to buy and sell for. It's like real estate. I know I make money in real estate when I buy it, not when I sell it, because I've done my research.
Exactly.
Numismatics, I think, are the same thing, aren't they?
Exactly. They are the same thing. And so when you're looking at what those premiums are, they're not as low as they were. You know, 4 years ago, you were probably buying it at pretty much the most compressed that they were historically, right? So that's why you did so well. But that premium is growing. The biggest reason, I mean, so that's one of it. And that's one of the reasons. And you're looking at things that are super rare. Even in the common dates, compared to how many bullion coins they mint, they're still super rare.
Yes.
And it's always, it's a true demand and supply market, you know, but honestly, the biggest reason, it's not even the taxable, because all good citizens should always pay all taxes that are due, though these are not reportable. So you get to choose how you want to handle it. But it really is about a potential confiscation. I mean, it's not like it hasn't happened in this country more than once. Last time was 33, but manipulating, and we talked about Greenspan coming out and saying, well, what if we just kind of tweak the gold price a little bit? That would have an impact on psychology. So why are they trying so hard to keep people away? And I don't know, and this is not something I can exactly prove, but what I would say is I think it was a coincidence, or not a coincidence rather, when the Bitcoin came out in January of 2009 and quantitative easing came out in March of 2009. And so a lot of the wealth that would have gone into hard asset gold went into cryptocurrencies, right?
Yes, it did.
So
big time.
Big time. So, you know, I mean, mission accomplished for a minute, but I think the premiums will get bigger and bigger because of the scarcity factor. And also, I want to be in the same category as the guy that pays $15 million for an ounce of gold.
Sure.
I don't have to do that, but I want to be in that category.
Yeah, and so those are really good points. Last question, I'm going to leave this open-ended for you. You talk about a lot on your channel. What to you, other than SOFR and that system, what to you in the next year is something that people need to be aware of that maybe they don't know, that maybe they could come to your channel and learn about? What do you think is another big factor that people just aren't talking about, but they need to be aware of?
Well, it is a completely, I mean, they've stated it over and over again. You will own nothing and be happy. Well, if you hold your wealth inside of this fiat money system, it is so much easier to take away from you. And who can you call? Who are you going to complain to? So I think it's critically important to understand that the reset transition into a completely new social, economic, and financial system is well underway. And I think that coming into 2023, I think there will be a huge crisis. And so you want to make sure that you are as independent again and secure. So we have another channel, BGS, Beyond Gold and Silver, to help you make sure that your food, energy, food, water, energy security, barterability, wealth preservation, community, and shelter, that you are secure in all of those areas. Because if you're not, it's going to be much harder for you, and you're going to be more dependent on the system. And let me tell you, I don't think anybody should be dependent on the system at this point, because you know, then you're forced to do what they want you to do, whether you really want to do it or not. You have gold and silver outside of the system, plus plenty of food, water, etc. They want you to do something? No.
Yeah. Lynette, it's been an absolute pleasure having you back on. I wish I could talk to you for hours, but I know, you know, we both live busy lives doing content. If people are interested in ITM trading and they're interested in some of the products, how do they go about getting access?
Well, we're easy to access, itmtrading.com. We also have a YouTube channel, and we're on BitChute. We're on all those other channels. We've got podcasts, so it's easy to find us there. BGS, which is a website as well as a YouTube channel, and they can call, because we actually like, as you well know, we like human contact. So 888-696-4653. And we have consultants that have been fully trained, as you've experienced, in the strategy, which, again, just a repeat of history. So, or you can find me by my name, Lynette Zang, Z-A-N-G. That's pretty easy too.
Yeah. And I think we have a lot of crossover between our audiences, but in case nobody's ever been to your YouTube channel, I fully recommend it. There's so much information there. And if you just want all the stuff that Lynette studies on monetary history, basically is put on that channel. So if you want to understand what she understands, all you have to do is go and watch the videos. It's all laid out there. Thank you, Lynette, again, for joining the program. I appreciate you doing that with your busy schedule.
Oh, it's my pleasure. And let's not wait this long.
Oh, we won't.
And you'll have to come back and see the changes. There's a lot of changes in 4 years.
Well, I think, Lynette, I've dubbed this the period of the quickening. It's after the Highlander movies. But what I mean by the quickening is it's kind of like the 11th hour to the 12th hour. If you go over that analogy of filling up like San Francisco Candlestick Park with a drop of water and it doubles every second or whatever it is, most of the water gets added at the very end. And I think that's where we are. All the stuff is like accelerating so fast that we really need, you know, to talk more often about this kind of stuff. So I definitely will take 100%. You up on that.
Thank you.
Thank you, Lynette.
My pleasure.